Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. Well, markets have been dipping lower and lower, and the volatility has been very high, and that too with the gap ups and gap down opening. And if you look at this is on the back of Russia and Ukraine war. The news are sometimes positive, sometimes negative, and the market reacts with the gap up and gap down opening. Well, as a trader, I would say it's time that we take a pause. And if you remember, I've done a video last week, the Traders War Room. In case you haven't watched that, do go to our archives and watch the video. Where I highlighted the volatility has been very extreme. Feb months have been out of 20 trading sessions, 18 has been with the gap up and gap down of more than 50 points, which indicates that even if you are long or shorts, the volatility with the gaps and gap up and gap down, it's not in your hand, and it might hit your stop losses, or the loss are more than expected. So keep in mind that either you lower down your position and do a proper risk management before entering into the trades. In this video, I'll be discussing, as you have seen the heading, IT I think is coming up as the strong contender, and that could be the one sector which could lead Nifty into the reversal momentum. Now, if you look at the first chart over here, okay, this is a weekly chart of IT index to Nifty, and if you look at the last week, we have seen an uptick. It means that IT index is usually outperforming against the Nifty now. And if you look at previous 3-4 weeks of consolidation and then a bullish momentum building up onto the ratio chart, indicate that IT is coming back very strongly. Most importantly, if you look at the previous lows which were there in 2021, is being held very structure has been very bullish. So higher low structure still intact onto this ratio charts, indicate that the momentum is very strong for an outperformance of IT index over the Nifty. Let's look at the IT index chart. So first chart I will be referring is the daily chart. Now, and if you look at the blue line within, is a 200 days average, and generally 200 is termed as the long term average into the technical parameters. Now, if you look at the momentum, it's been holding the 200 days average very strong. Since 2020, when the reversal happened, this is the first time index has tested 200 days average, and it has been holding very strong. And even if you look at the uptick in the last couple of weeks from the support zone of 200 days average, is indicating that the momentum is very stronger. If you look at the pattern wise over here, we are looking at the broadening wedge over here. So if you look at the low has been held, the broadening wedge has been structure has been formed. Once the last week or last 2 weeks highs taken out, I believe the momentum will be very fast and furious for IT index on the bullish side, which could again lead Nifty to the higher level, because we have TCS with the higher weightage, we have Infosys with the higher weightage, Tech Mahindra into the Nifty 50. So that could lead IT index to the higher level with the Nifty following up the IT index, and we might see reversal coming by very strongly. Though if you remember, we have done a video as well as on Nifty, where the long term trend is still very bullish, because amid these circumstances where the Russia and Ukraine stuffs are going on, markets have been very volatile. We have seen markets correcting back towards 16,200 levels. So I believe that once this dust settles down, we might see a bullish momentum coming out. Well, if you remember Nasdaq, if you look at the momentum of Nasdaq, generally IT index follows the Nasdaq momentum. So let's look at and analyze what the Nasdaq charts are indicating. Now, if you look at the Nasdaq chart, if you look at the support zone of the last year May, where it was consolidating before a rally of around 14,000 on the upper side and 13,000 on the lower side. That rally has been retested now, the consolidation zone, and since once it broke out 14,000 level, we saw 16,700 levels on the higher side. Now that demand zone is coming back very strongly. Plus, if you look at the black lines over here, this is the bullish crab pattern, which is generally the harmonic pattern used Fibonacci are used to calculate such kind of patterns, and they are reversal in nature. So when they form at a crucial support zone, a crucial oversold territory, they tend to give a strong reversal momentum. And if you look at the blue candle, the big candle over here, which is marked in green as bullish belt hold, and generally bullish belt hold are the structure where the momentum opens with the gap down, and there is a sharp rally into coming into it. So 13,000, I believe, will be a crucial juncture for bears. If in case they fail to break, we might see back towards 15,000, 15,500 levels, considering the bullish harmonic pattern building up. So just keep a look at, we have closed somewhere around 13,800, 13,900. Any dip towards 13,500 could be a good accumulation for Nasdaq as well. And till 13,000 is not reached, I think the reversal is in place for Nasdaq, and we might head higher. Again, as I said, IT index is a follower of Nasdaq, and the momentum could back into the bull's court once the Nasdaq start recovering. IT index is again outperforming against the Nifty. As I said, we have seen a ratio chart. So that could be the one trigger. The Nasdaq could be the one trigger which could take IT index higher, and IT could take Nifty higher into the reversal zone. So keep a watch on the last 2 weeks high of IT index, and if those are worked out, we think that the momentum could be fast and furious onto the bullish side for IT index. Signing off, Brijesh Bhatia.